Welcome back, everybody, to Legends of Water. I'm your host, AJ Case. With me here tonight, I am very pleased to have Mr. CEO Ken Berenger, co-chairman Riggs Eckelberry, and COO James Willison, all of Water on Demand. And we finally, the dam is breaking. The floodgates are opening. We can finally talk about the immense amount of work that has gone into what is really effectively the last 6+ months of moving us into the next evolution of our business. And so we can now proudly announce, you should have seen the press release today, that the Qualified Opportunity Zone Fund for Water on Demand, the first of our coming many funds, is now live. Guys,
it went from Voldemort, he who shall not be named, to we can say it, right? It's great. It is. It's almost like having a baby. Not that I've ever had one, but I imagine, finally.
I was there for a couple of those.
Yeah, I was present.
I was there for a couple of those. Big deal. So that being said, let's talk about how we got
how we
here,
all
right?
avoided that one. We just let that one drop. That's good.
It's a good.
Was like, not saying a word.
You can tell we're all married.
Really smart to let that one go.
We're all married men. We know when to leave things well enough alone. So let's talk. The first thing I want to do now that we kind of got the sigh of relief out of our system is not to bury the lead too much, but I do want to talk to you guys about how we got here. I want to help everyone understand. If you're one of our amazing existing investors that has stuck through us through this transitional time, we very much appreciate you, and you are well aware of the intricacies. But for those of us that are joining us either for the first time or very recent to Water on Demand and our mission and what we're trying to do, Water on Demand has had quite the interesting year. And Ken, you want to tell us a little bit about kind of where we started in terms of our company goals this year, and then how we started kind of making this next part of our journey here?
Right. So we went through kind of like a forced change. We started out with a vision that we were going to be a fintech for water. And we had the water part worked out. It was like the anti-gravity chair, right? We have the chair worked out. And the primary focus, or the primary obstacle, always was how to compete with, I tell the story about how I went to London and they were falling in love with it and the idea, and they were like, great, what's the tax break? And I was like, I don't have that yet. And there was just kind of a pall fell on the room, right? So we knew that to access that level of capital, there was going to have to be a tax component that we hadn't figured out yet. So we had amazing supporters come in, raising the money for the company to become the fintech. That's relatively easy, right? It doesn't require, hundreds of millions or billions of dollars. They're doing it for a capital gains. They're doing it for a cap gain approach or for a capital appreciation approach. But as soon as you start to ask for funds for the projects, you have to be highly competitive. And through a lot of diligence, a lot of self-examination, a lot of strategy, and a little bit of good fortune, we got this milestone. We were approached, as you guys know, OZ Funds called us and said, we've examined what you're doing. You would be perfect. And we went, I'm listening. And then, of course, we went into month. Riggs and I, before even James dove in, months and months of detailed analysis to figure out if this was the way to go. And we came into it with the understanding that we're going to challenge this. We're going to say it's not the way to go. We're going to say, no, it's not. Prove me wrong. Right. And all of the study we did kept proving us that it was actually look, when something comes along and it solves all your problems, you have to go, okay, what's the catch? Right. That was the worry. Like, what's the catch? And we did, we really challenged the heck out of it. And we discovered over time that, there were some items we had to address, but this was the answer that we were looking for. So we have, and we're going to provide this. It's on the platform, which we're going to show you. But we have an extensive number of white papers that literally express the notion that the tax benefits are there. Using water systems in an OZ zone is, in fact, an incredible strategy. And then, of course, the operations and maintenance structure that follows that also is in detailed white papers. So there was a real struggle The struggle was just to come to grips with the fact that it was answering our prayers, so to speak, and it was real. And we just kept beating it up until we just couldn't get past the fact that the things that we needed were present in the model. So, sometimes it takes a little bit of time to become an overnight success, but here we are.
Right. So just to highlight a couple of those white papers that you guys will have access to here either very shortly or at request, is one that takes on the question of, I'm an investor. What does this look like for me? What does this whole opportunity zone investing thing look like for me? And it breaks down the traditional model of a limited partner and a general partner, explains what those things are, explains the tax strategies associated with each of those different opportunities, and helps you understand a bit better that whole process of investing in opportunity zones, and also will help give you context for our special ongoing sponsorship participation in the sponsorship offer, which we can talk about a little bit later. But that whole thing is presented for you.
And it's important to give credit where credit's due. AJ dove into this as a project manager's mindset, saying, okay, show me how I win, but show me how it breaks. In other words, he just kept saying, okay, but what about this? But what? And you'd get the answer you want. And you're like, oh, what about this? And what about this? So I think that's vitally important. Sometimes taking yes for an answer, the temptation to take yes for an answer is real. Especially when you can essentially change everything. You can create a new asset class. You can deliver on the promise to the world and to your investors exactly what you wanted to do years ago. So when somebody says yes, you want to just accept that. What we did very differently this time is we didn't take yes for an answer. We kept challenging it. And that was really through your extensive work, AJ. Kudos to you. You dove in with the experts. You did your own independent research. To make sure that we attacked it 10 different ways. We tried to throw 10 different ways where this wouldn't work, and we kept coming to the same conclusion. No, if you do it this way, it works, right? So
Right.
that was a
Well,
relief.
and that's a perfect lead in too. So there's also questions that we've gotten, right, as we've been talking about this over the past couple months of, does water as a service work in an opportunity zone? And I'm happy and very relieved to tell you, yes, it does. It doesn't just work one way. It works a multitude of ways. We
Multiple
also
ways.
have
Yep.
a whole white paper. Again, it's written in an unbiased tone to just describe legally and from a tax perspective how water as a service can function in three distinct different ways. And again, there's more than that, but three distinct different scenarios of which are not mutually exclusive that we're going to be probably employing as various strategies as we go down the road that just show you how it works and
And
really
we'll have layered
explains
approaches.
the basis for
And
you.
we'll be able to deploy any number of those. And we may deploy multiple strategies depending upon the circumstances. So we have multiple layers that we can deploy this strategy and to continue to provide tax incentivized or tax advantaged investment and income to the investors.
Right. And again, we did a lot of this one because we obviously owe it to ourselves to do things the right way, and we want to make sure that we're moving in the right direction. But also because I think producing the white papers is definitely a proof point that I want to be able to put out there, because we really are the first people that are doing this as out of an opportunity zone, right? I mean, the press release today, which I'm jumping the gun a little bit, but it's talking about we're
You
the
said you
first
weren't going to
water
do that.
infrastructure. No. I'm just saying it just at the top, just the topic, right? We're the first water fund opportunity zone. And it's like, Riggs, can you tell us a little bit more about like just kind of how big that headline is? Because I don't think people really understand that.
Well, first of all, you were talking about water as a service. In fact, you could not do an opportunity zone business if it was not water as a service. Think
Right.
about it.
Right.
You have to own the hardware.
Mhm.
Well, if you sell the hardware, then you're just a manufacturing company, right? So, but here we're a developer of water asset properties. That's a totally different game. So now we're doing literally water as real estate, right? And what
property
are we getting?
management, right? Yeah.
We're getting rents. We're getting pay per gallon rents, and so that creates this asset base. And I think that we had water as an asset as a service. We knew that worked, and then it is specifically vital for opportunity zones. And then opportunity zones contribute that 10-year profit exclusion, which everybody's so excited about. So I think the combination is really important. Now, we are a pure play as water as a service. There's truly no one else like us in the United States, first of all. And we're also the first water opportunity zone player. So we're literally first in two areas. It's very, very exciting.
And to just circle back on so why did we spend so much time getting so many experts to produce so many white papers? Because when you're first, people are going to go, well, how does this work? So we wanted to show that there were just layers and layers and layers of research, that literally we cite the tax codes, the chapter and verse, right? So a person can come in, as long as they haven't decided it doesn't work. If they say, well, prove it to me, all the material is there. So I believe that these fund managers, PE firms, family offices, they can go in and say, okay, well, I'm intrigued. Show me where I can get in trouble. And we'll lay out, look, we addressed how you can get in trouble. This is how this remains completely compliant. And having the partner of EasyOZ, they are a compliance as a service. So their full-time job is to make sure that every dollar that runs through the fund has a compliant outcome. Right, that's
And by the
literally
way,
their full-time job.
what's interesting is that the opportunity zone compliance is self-compliance, right?
Mhm.
But self-compliance can get you in real trouble. So the IRS says, well, it's up to you. You take care of it. But then if you screw up, then 3 years later they come back at you with all guns blazing. So OZ Exchange, which is really the word we should use because EasyOZ is the company behind it.
That's right.
But OZ Exchange is the portal that ensures compliance. Every 6 months, they go in and they're acting on behalf, like, I'm going to pretend I'm the IRS and
Right.
I'm going to
They audit
tear you
you.
apart.
They do an audit, right? They
Exactly.
do a forward-facing audit from them to avoid the real one, right? And that's
Correct.
huge.
And over time, they become a trusted partner of the IRS because the IRS does not like doing things twice or three times. So if they know, oh, this is an OZ Exchange audited opportunity zone, they'll check off. And that's the beauty of that system. So we're super, I think that's the third leg of what we got going here, which is the partnership. All right. So in terms of the magnitude of this, basically it is the first ever opportunity zone for water. That is the press release that AJ is going to show us, and that we now have a fund listed. We're going to cover the press release briefly, and then we'll get a quick tour of the listing because it's behind a registration wall, so you get a unique view.
Yeah, there's some really good reasons for that, which we'll lay out. But yeah, just to kind of put a cap, I guess, on this first segment is, and once again, very graciously thanking our current investor base and all of you that have joined us thus far on this journey over the last few months, and joining on top of the mission to really save the world's water one project at a time. This is really us just showing you your trust is not been betrayed.
Right.
We're
Your
trying
faith was not misplaced.
We absolutely are doing every bit of due diligence that we can to show you how this works, how we're going to make it work, and we'll continue to walk through that. So it's really an exercise that just says thank you very much, and continue to walk us. I said, we're taking a victory lap on the starting line here. It's been a lot of work. And I was joking before the show, right? I was joking with the show before the show with Riggs, just saying like the nautical references, right? Like how hard is it to move a giant ship? Especially when you got a handful of crew. It's impossible, right? It's near impossible. It's so hard. And so we've been working really, really hard over the past number of months to get all of this stuff prepped for you so that we can have this really, really exciting time today. So not to undersell it and not to hold back the dam anymore. Let's get into it. I'm going to go ahead and share the press release, which went out today. I love how we do that. It's like we know what we're doing or something with marketing. You just put out your press release on the same day you're doing a podcast. Yeah, it's fine.
Yeah. It's because
It's not like we beat the heck out of everybody to get it out before the podcast. That didn't happen.
No, we didn't do any of that.
You pretend there's no shouting. That's what you do.
Right.
Never shout.
Never shout. So here we are. Fantastically, Water on Demand, first ever Opportunity Zone Fund for water, right? Water on Demand Inc. Near in private industrial water systems, you betcha, announces official listing of first ever Opportunity Zone focused on water projects. It's $200 million fund. Love saying that. Is our first infrastructure fund, now live and accessible on ozexchange.com, the nation's premier marketplace for Opportunity Zone investing. So we were talking a little bit about the Oz Exchange. And I think we can kind of tackle this maybe in phases, Riggs, this press release, if we want to have you just kind of show them the OZ Exchange. But again, as Ken mentioned before, part of what's so exciting about the OZ Exchange is they really are the premier marketplace for opportunity zones and opportunity zone funds. They handle all the compliance, all the reporting. And as you will find, and again, part of why Riggs is doing this walkthrough is that in order to access information, you actually need to create yourself an account. And as you do that, you will have the opportunity to verify your status as an investor so that you can understand what opportunities are available for you and you can actually participate straight from there. So it really is a complete robust platform.
I want to say one thing about EZ or OZ Exchange being the premier platform for this type of operation. Like, in other words, hard work pays off. I'm going to kind of speak in general terms. I think David's actually going to put out some press on this, but he's recently secured a group that have about $3.5 billion under management, including, I think, 2,000 friends and family funds, kind of smaller prepackaged funds, but PE, VC firm, family offices. So after numerous meetings with him, they realized that this was the place to go. So as deal flow starts to, as like people coming from our side saying we have deals, you now have an audience with an appetite to start engaging. And you'll see the numbers on the OZ Exchange, how much is certainly currently sitting in escrow, how much is currently deployed. I think you're going to see those numbers explode over the next couple of months as these funds are exported into the exchange. And I happen to know a really good place they can put their money.
I agree. Riggs, how about you show us?
Why not? Why not indeed? Okay, so with that, let me just jump right in here and show you guys. All right, so I'm cut straight to the chase. Of course, RE, that's me. I've already logged in. I've created a profile, and I search on water, and here comes, there's really just two. One of them is really just a social impact play. We're much more broad. We're much more ambitious. So let's go ahead and take a look at what this is all about. So again, this is $200 million investment vehicle, and we have the terms, which is, I'm not going to get into it, but it's the various terms of the investments. Over here, we have documents, the investor document set, 10-year financials, operating agreement, and the investment management agreement. Okay. Sure enough, there's stuff about us and then getting into the runaway costs and the dramatic underfunding. We're talking about $500 billion of underfunding by just 4 years from now. So this is huge. And then we have the return analysis, which gets into the structure. This is something we can get into deeper with you directly. And then what you need to know is that the fund is a shareholder in the actual OZ business, which is operated by Water on Demand. So Water on Demand Inc. Is the managing partner of Water on Demand LLC, the actual opportunity zone business. So, and it's important to know that the fund itself is not the business; it's simply the investor. The business operates the whole water network, and that's a quick look at it. I think that it's an exciting first look. I'm really psyched.
I want to comment. So you talked about another fund up there that was a social impact play. I want to talk about the social impact. I've been making a statement for a while that every $1 million invested, it generates about 14 million gallons of cleaned or restored water every year for the rest of your life. I'm here to say I was wrong. What I recently found out is we can finance not just the project, but we can finance the equipment and leverage the equipment. So we now, as a social impact play, we're talking about IRRs near 20%, right? 100% bonus depreciation. But because of the additional leverage that this provides, we can say now with pretty high degree of confidence that $1 million invested in this fund could be responsible for generating 36 million gallons of restored water every year for the rest of your life, which, these systems are going to essentially last for 50 years. So from a social impact view, from a pure impact investment view, I think we hold up against any other impact investment and getting all the other advantages, of course, is a very big deal. Now,
Absolutely.
I also want to point to one thing. We've done more physical execution and due diligence in the past 2 months than we have done, I think, previously. We have really dove in. Finally, when we had the fund put together by David and his crew, then we went into informing it. The amount of due diligence and execution that we've done in the past 2 months is mind-boggling. I don't think 10 years ago it would have been doable by such a small crew, but we've been blessed with some technology assets that have allowed us to do this. And we've really taken a measure twice, cut once approach. And it's really when you go into the portal and when you see it over the next week or two specifically, you'll see how much work has gone into this.
100%.
Quick note before we go on, and that is Ken used the term IRR. And for those of you who don't know exactly what that is, it's basically your return on investment over time. You're looking at, when you're talking about 20% IRR, you're making a fifth of your money every year for those 10 years. That's what it means. It's a very high return on investment for a 10-year fund. So I just wanted to mention that.
And so one of the kind of again results of all of the work that Ken was just talking about and all of this due diligence in really deep diving and really focusing on execution is understanding that you got to start somewhere. And another question that we do keep getting, it's almost like we need an FAQ on these kinds of things, Ken, you think?
I just did one.
Yeah, we'll have one of those to circulate as well.
We got to stick it in there. We got to make sure it's in there by the time this airs, or well, it's airing live, but I'm saying by the time people kind of see it and then have an opportunity to go to the link, that'll all be on there. So we'll have
we'll have an FAQ for you as well. Again, and first of many, as we continue to build out documents and we think that it's helpful for you guys to understand, or if we get enough questions about these things, we'll create more documents. But
absolutely,
we do have an FAQ that's going to be coming out as well as being able to link to existing resources and existing FAQs to talk more about this stuff. One of the questions that I get is what's your go-to-market strategy, right? You guys are really, interested in talking big, and the realistic, or the way that this can play out is that we can grow this opportunity to be a nationwide and then a global force, right? We've discovered multiple different paths on how to operate these different types of businesses, or even have different different parts of the existing business to scale and to grow far outside of where we're starting. But you have to start somewhere. And where is it that we are starting? Well, for those of you that know us, you should probably have guessed it by now. We're starting in Texas. Why would you start in Texas, you may ask? Well, we happen to have a whole manufacturing division there. That's a small detail. We also have another partner in there, Enviro Maintenance, who we just announced earlier this week.
Are we going to show that? Are we going to show that PR? Because
I will once we get more into that as I talk that over to James. But we have existing partners in Texas. We have existing established relationships in Texas. We have our manufacturing base in Texas, and there's quite the market of which you can go back into the numbers and break down the actual numbers in Texas. And the size of the market is multiple billions of dollars just in opportunity zones.
Yeah, remember, you have the Permian Basin there.
Yeah, you have multiple billions of dollars of water project demand in opportunity zones in Texas. You have tens of billions of dollars of water water project demand outside of opportunity zones today. So there's plenty of business to be able to secure a $200 million fund and then leverage that beyond for our first going. So it makes it's a perfect match made in heaven. It's almost providential that we have all of this stuff going on in Texas, and it's such a ripe market for this stuff. So that's a really important point.
We could operate multiple funds and never leave
that.
Texas. We could operate multiple funds and never leave Texas if we wanted to.
Correct. Now we want to leave Texas. We want to take over the world, and solve the world's water problems, because it's funny when
the demand is so high there.
Oh, it is. It's immensely high. So it's a perfect place to start. And again, for those of you that have that question, I wanted to make sure that we had an answer specifically for that. So all that being said, I do want to go back to that, Ken, to talk about the press release that we had earlier this week. Again, for those of you who didn't see it, I will flash a version here on the screen for you guys to talk about. And then I want to pass it over to James to just talk a little bit about this, because he was largely responsible for kind of developing this whole JV here. So let me pull this up, and I will turn it over to you, James. Water on Demand Environment Maintenance Plan to deploy innovative mobile water treatment plants.
Thanks, AJ. I appreciate that. Yeah, look, I think what you just said really, which is the synergies of us working with environmentalists are absolutely incredible. It was really interesting how it came about because so Brian Klepsig, the CEO of Environmentalists, really really nice guy. I had spoken to him once about 2 months ago, where we just started talking to each other. Um, and then it was about 2 weeks ago, the two of us connected over something, and this thing just moved really quickly. Where he came to me and he said, you know, I'm looking for some capital. I've got an idea. I know you guys are looking to deploy capital. Do you want to talk about this? And I said to him, yeah, absolutely. Let's have a talk about it. And the minute I heard what he was trying to do, where he wants to go and service wastewater treatment plants using this really, really advanced, essentially mobile wastewater treatment plants. I mean, there are these 7-axle dump trucks with all this highly, highly specialized proprietary equipment built into the trucks. They go and they do the treatment right there on site. They're taking the waste off site, dumping it. And I'm not going to get into the details of exactly what they're using. I'm not sure what Brian wants to be spoken about and whatnot.
It's specialized.
Yeah, I'll just say very specialized,
Right.
very specialized. And he's managed to negotiate a certain radius where he can operate, where he has complete exclusivity. So he's got the product, he's got the geography, he needs capital. And I think he's also looking for, some strategic help on as he grows his business, which is something we can bring to the table as well. So from our side, number one, you were just talking about it. It's in Texas. We love that. Number two, which is really interesting, is he's operating in an opportunity zone, which I just thought was absolutely incredible. Now, what we understand, what we know with the rules, that wasn't even important, but it's great.
It didn't hurt.
Didn't hurt at all.
Right.
Number three, he's got the clientele, he's got the projects, he's got the sites, he's got the business. We've got the capital. We can help with him growing his business. There's the impact investing you were just talking about, Ken, the ESG side of it. It's just doing the right thing. The efficiencies that this brings to the table it's a perfect dovetail when I talk about synergies, not just how he can grow the business and how we can help and how we're getting our projects out there now, because as we take funds in and we have to deploy them, right? Well, we can start deploying basically immediately. So it moved really, really quickly. This is one of those times where you're kind of egging each other on, like how fast can we go to actually get this off the ground? In fact, Ken, I'll pass it back to you because you just met with him this morning.
Yeah, I had a conversation with Brian this morning. It was a great call. You saw my follow-up email. So Brian, and again, without fleshing out too much of the idea, each one of these mobile, we'll call them treatment plants for now, about $500,000, and they run at about $250,000 a year in revenue. And they have a life expectancy. He's got one already in service at 20 years. So at 30 years is, even with the model. So an individual system at $500,000 would throw off 4.5 million or $5 million of revenue over the life. That is 2 or 3 times what an ordinary water plant would throw off in terms. So as the backbone of an investment vehicle or of an asset, it's phenomenal. Now, this joint venture is for us to fully integrate our business model together. We're going to create a model within a model. And I'm going to work very, very rapidly. So look, we announced the fund is live. We announced the operations and maintenance piece, which is critical to Water on Demand's
I didn't mention that.
overall operations, but it's in a tremendous profit center for us, which I'm going to get into a second if I can effectively share my screen for a second. But more importantly, he could have a dozen of these systems operating in the state of Texas in a handful of years. So in other words, fund live, boom, O&M partner and a joint venture so he said, look, when can we get this money? And I said, look, we know a group of investors that are working right now with capital gains that they're going to have to deal with next year. We could meet with them in a town hall and probably get you your first site within, weeks or a couple of months. And he was absolutely thrilled. So I think we want to have our first project on the ground, not immediately, but I mean, we want to target the end of the year. Okay. That would be it's a little aggressive, but I've been known to be aggressive. And I think we have the personnel, we have the desire on the side of the client, and this now scales. He'll be our local and regional operations and maintenance partner. He's already putting together quotes from multiple. By the way, he was our connection to the mobile home park space, right? He has thousands, or I think hundreds or dozens of mobile home parks that are going to need upgrading. And most of them are going to run into the money problem. So I already asked him, I said, look, put together for me what an operations and maintenance project for a system for 5,000 gallons a day, which is pre-permitted, by the way. So it's boom, 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 boom. 5,000 gallon, 10,000 gallon, 25, because these are the ones he specifically mentioned. So I'm going to have hard quotes, and we'll be able to build that into our model. And the good news is the early numbers that I'm getting from him already match what was in our model. So they're very, very, very close. It won't be a lot of wiggle in our model. And it actually may be better than what we had assumed. Now, we're doing extensive research. I've turned into a nerd. I had to. And we're doing a ton of research, again, because execution is everything, right? We want to bring to the investor, now that the fund is live, they go, okay, show me how it works. So you have to bring paper. So I want to share with you my screen. I did a little bit of research. Let me see if this works. Here we go. Okay. All right. So what we did was, that's a first for me, guys. So what I did was, I'm working within the operations and maintenance space. I said, look, I have a $200 million fund. Now, here's something else that Riggs's eyes lit up when I mentioned this to him the other day. I said, look, I want a $200 million fund. I want to be able to leverage that fund, based on the fact that it's hard equipment and that there's a cash flow. What I didn't know is that you can leverage the project. You can project finance for another $200 million. And then about 50% of the total property you can leverage, which is $100 million. So this may affect our internal rates of return for the fund.
True.
I'm going to have to challenge it a bit, but it'll end up being about $500 million, as you can see, of equipment that'll be deployed. Okay, this is what's interesting. Water on demand is going to, this is based on the experts' understanding of the industry. We're going to sit as a master service provider, a master service agreement, okay, above white labeled or subcontracted O&Ms like enviro maintenance, like others that we're about to announce. So they'll go out and physically do the work. We're going to be managing them as part of like a property manager. We get about 25%. And I said, look, spread this across 3 sectors. Very small systems, 20,000 gallons a day, 50,000 gallons a day for medium and large. Now, we don't know if this was what the ratio will be. If it weighs more towards the small, it'll actually be better numbers. If it weighs more towards the heavy, it might be a little bit lighter. But for now, I said even distribution. $29 million for service on revenue of small systems. You can see it's a lot more. Standard size, 14 million, and 6.1 on the large. Okay. $50 million a year in operations and maintenance revenue. Now, how much do we pass through to the operators themselves? About 3/4. That means that Water on Demand's oversight is 9 point. Now, again, these numbers can change. This is subject to change. I'm going to challenge these premises extensively over the next couple of weeks. But the early signal is when the fund is fully funded and fully leveraged, and now the systems are in place and they're generating clean water, the operations and maintenance alone will be $10 million a year for a single fund. So when I go to these operations and maintenance operators, I go, I have $40 million of business for you guys. Are you interested? It's already in place. So I think that we're going to become, kind of a magnet for really high level talent, high level capability, guys like Brian, but on a national and even a potential international scale. Now, this is It goes into a little bit more, but there's some interesting stuff here. I said these systems last 40 years. Okay. $700 million of income on the operations and maintenance side over 40 years. 8.3 billion gallons of water we'll be restoring per year. 330 billion gallons of water over the you want to talk about impact? 330 billion gallons of water over the 40-year period.
On one fund.
On one fund.
On one.
Right.
One fund.
And I already told you,
right?
One fund is a drop in the bucket. So I'm going to unshare. Hopefully I did that correctly. But so this is the extent and the depth that we're taking. We're leaving no stone unturned. We're coming up, we're putting together data, and then we're challenging it and challenging it and challenging it till we really we're getting a measure of 3 times cut once type of attitude. So we want to inform. So when folks are entering the fund as tax advantaged investors, we want to have extensive amounts of data because it is a first. Well, how do I know it works? Well, here's 50 pages showing you that all the experts in the field say this works this way and this way and this way and this way and this way, right? And being able to show this white paper to operations and maintenance potential partners, say, look, here's $40 million. You want it? Anyway, I think it's very, very persuasive.
No, it is persuasive, especially when we talk about our initial go-to-market strategy, we're talking about Texas, which has in place express permitting for systems of 5,000 gallons a day or less, right? So they're part of our go-to-market strategy is being able to leverage things like that as well, and using, again, working with a partner like Brian with his connections to be able to have systems in high demand of that caliber, then only plays further into the positive side of what you just showed in your operations and maintenance model, Ken. So again, a lot of these things are coming together.
If you noticed the balance of revenue on we were talking about 20,000 gallon a day systems. Okay. That's not huge. These are 5. Okay. There was so the $49.9 million was spread. 29 million was in the sub 20,000 or 20,000 gallon a day territory. If we get a very large presence in these smaller systems, the revenue will be dramatically better. Right.
Well, that tends to be also what does not get the capital, right?
Exactly,
the smaller
right.
operators
They're going to be
capital.
far more capital constrained, 100%.
Yeah. Right. And in opportunity zones in particular are places of high growth expectation because they have larger needs.
Exactly.
Right. Which is exactly what, just to be a little bit more direct on what you're saying, Riggs, right? These are high growth areas with tremendous amount of needs. And so we can be doing a lot of good by providing this caliber of a system at a very rapid pace. So there's a lot to there. So,
and by focusing on the opportunity zones, we're restoring the America's underserved neighborhoods. Now, we want to go everywhere. We're going to go everywhere. That's my intention. I will say that with very few caveats. But if we can begin the first several years of you could never run out of opportunity zones. Like we could operate in the billions just in OZs. But
there's another factor, which is the Trump effect. The one big, beautiful bill act, the OBBBA, and signed on July 4th, reinvigorated the Opportunity Zone program, which has broad bipartisan support. Everybody loves it.
Right. It's not a political issue, right? It doesn't change with the election. Yeah.
What you're getting is it was just property development. Now it's much broader. It's OZ businesses, manufacturing, assembly, all kinds of activities like that are going to start streaming in because of this, and they will all need water treatment. So the growth area is actually the OZs.
Yes. Now, what's important to understand is I've done some calculations. Water on demand becomes completely self-sufficient with just $100 million under management. That's with the 2% management fee. That's taking out the $10 million a year and the 20% income of each fund. So spread across 10 funds, this becomes monstrous. This is why being an OZB is a big deal. This differentiates us and allows us to potentially expand everywhere. And that's why participating in the general partnership becomes a proposition that far exceeds the potential of even the fund investors. They're in it for the taxes. We get it.
Well,
right?
So you bring up a really interesting point, and this is kind of where I wanted to move the conversation to, because again, just to recap, right? The fund being live is huge. All of these implications are huge. We're going to be circulating the due diligence documentation around. And I'm even going to tease it now. I was going to save it for the very, very end, but I am going to tease it
What does it
now.
mean for our investors? Oh, okay.
No, it's not just what it means for our investors, but the model that we keep talking about. We're actually if you're a current investor, keep your eyes on your inbox, because we're going to be very soon putting together a town hall to review that model behind closed doors with you guys, so you get a real deep dive, a real velvet rope kind of experience, where we can actually walk you through with Riggs, with Corey, with Ken, and really give you a chance to open it up and to see what this looks like and to see all the work that's been done on it. So keep your eyes on that. But yeah, what does this mean for our investors is really the kind of the thing I wanted to say. Okay, we've done all this work, we've given you the history. What does this mean for our investors, Ken?
Well, I think I kind of hinted on it, but imagine owning the.
Well, we know it's phenomenal for the business, right? I mean, the revenues and all those things are phenomenal.
If you're an investor
for the
in the business, you can kind of do the math, right? No, so look, imagine owning the company that owns the fund. Fund 1, Fund 2, owns all the operations and maintenance revenue, right? Is able to create an almost unimaginable strategic impact to American infrastructure, to be able to actually bend the curve on water pollution while simultaneously dramatically, rapidly building up poor neighborhoods, beat up neighborhoods. Remember, Detroit in the 1962 was the shining city on the hill. It was one of the most productive cities in America, had some of the highest per capita incomes. That has been, hollowed out. There are hundreds, maybe thousands of neighborhoods like that in the United States. Every one of them is an opportunity zone to be able to reshore $5 trillion of manufacturing. Now, there was no reason for manufacturers to go to these areas. They were going to go out in the country somewhere. Well, now there is. Okay. We can be essentially a linchpin behind manufacturing and agriculture and commercial development across the board in every underserved community in America. So what does it mean for investors? What does it mean to own the company that owns the fund? What's the valuation on a company that has one fund with $500 million of property that throws off, well, we know it throws off just for itself, $100 million of operations and maintenance income? What does it throw off on the 20%? What does it throw off on the 2%? So if you own that company, what is the valuation of that company when it moves next year, late next year, towards a public listing? If we've successfully started to fill this first fund, and we see that it's a drop in the bucket, I hate to use a water analogy, but if it's literally not scratching the surface of the demand, and we can indicate that we're going to open up 2, 3, 4, 5 more funds, how does Wall Street treat that as a public company? We don't even know. But going to the other side of it, if you can own a piece of the general partner that will own that fund, that will manage those assets, that will receive 20% income, if we can pay you an outsized portion of that, because look, what we're going to do is, I already explained, Ken, why would you give away 50% of the income of the first fund? Because it's not going to be the only one. Why would you give away 50% of the first fund? That's a ton of income. Yes, it is. Because we wouldn't be here without you. Because while it took a lot of execution and a lot of research and a lot of work, and my head hurts, it took your faith, your early faith, before any of this was in place. So now it's time to create prosperity. And you'll have to excuse my dog. My puppy just got up and stuck his face in the thing. But so the reality is, it's now time to position you folks as recipients to be on the winning end of it, as this graduates to a public company, but also to create. Now, why also don't I need the money? Because if the operation and maintenance can bring in anything close to $10 million per year per fund, and I have 10 funds, I can part with this money now. It's fine. We plan on being the sponsor to an unknown number of funds, and the impact that has on our bottom line as a company is unknowable at this point. So it's exciting on all sides. So that's what it means to our investors. You came in early, you had faith, your faith was carried with a great deal of work and effort. And this is the beginnings. This is just a peek under the tent, if you will, of the overall potential of this.
Yeah, I mean, when I first joined Water on Demand, both you and Riggs were constantly talking about there's this massive cohort of individuals, right, that don't get deal flow, don't get access to be able to do deals like this, that
Right.
don't get access to be able to make the kind of impact both to their portfolio, but also in their impact investing, because they're either not institutional money, they might just be accredited investors that have money to invest, real money to invest, but are always coming in late, not getting the good deals, right?
Yep.
And so
Yep.
we continue to structure these deals to be attractive to that cohort, because just like we want to serve in these opportunity zones, make an impact on those water, we also want to invite you to come along with us and be able to be participating earlier than anyone else gets to.
Let me double down on that. So for those of you who have come in early on the GP, thank you. This is what I was able to produce just with your faith. Now that all changes. Now that the fund is live, we're going to be starting to talk to institute. We're going to dramatically bring down, not tomorrow, but I mean, it's going to be a fairly rapid, because I don't want to punish the early faiths by providing the same offer to everyone across the board by necessity. It's the only right thing to do to those who came in early. So we're going to be reducing the multiples under which, how much of that GP percentage we give you. If you invest $1, you could get up to $3 right now in representation in terms of income. We're going to cut that down to 2.5, and then 2, and then 1.5, and then of course the stock grants that we were offering. That too has to get cut down necessarily. Here's the greatest thing. The original version of Water on Demand relied on you folks investing in us early, and then us going to the market, going to the street, Wall Street, and saying, we want you to finance a piece of equipment for $300 million. Good, give us $300 million worth of stock at favorable terms. Well, guess what? That was going to dilute the hell out of the company. Guess what? Nobody here gets stock in Water on Demand, the public company. There's no dilution. So you getting stock at this level, you're not going to be sharing that stock with a guy who comes in for $2 billion and gets 8 bazillion shares of Water on Demand stock. This Water on Demand opportunity zone is truly an asset investment. They're only interested in the asset. They want the asset. They want the revenue flows. They want the tax breaks. We get to keep the company separate. Now, it participates in benefits from all of that investment capital, but it doesn't have to dilute the company's float. This was an unknowable advantage in the beginning. I only kind of realized it after we started putting it in place. So that's the part, as a guy who understands public floats and dilution and stuff like this, the fact that we have to give away none of Water on Demand stock to these, multi-billion-dollar investments is a windfall for us. And that's why I kind of want you guys to get in early before I have to start cutting the generosity down, simply as a matter of fairness to the people that have already invested.
Absolutely. So again, to kind of put a cap on this particular section, or this segment, thank you guys again so much. I'm going to do a lot of thanking. Thank you guys so much for being here with us. I hope you guys have understand now the amount of work. Again, the resources are going to be made available to you. Make sure you're checking your inboxes for information about the town hall concerning the Water on Demand model. All of that stuff coming in very short order. So the last thing that I want to address today on this podcast, so the last 2 shows, we've been talking about the dark secrets of water infrastructure. We've been talking about how the vast decrease in government spending has led to a massive chasm that is supposed to be filled by taxpayers, but can't realistically be. And so it's creating this massive funding deficit for water infrastructure, and that it necessitates the private capital resources to be able to come in and fill this void. And so you guys have heard us. If you haven't seen those shows, go back and watch them. They're phenomenal in terms of giving you really good information and looking into those things with a much larger lens. But what I wanted to cite today is we are not the only ones that are saying this. It's not just us.
It sounds
right?
like social proof time.
It sounds like social proof time. So I don't have any show and tell for you, and I want to keep this somewhat brief because we've been talking a lot more about the meat on this show than we when we have in the past, because we got so much to share.
Right.
But
all steak,
I
no
do
sizzle.
think it's yeah, exactly. I think it's extremely important to talk about the fact that the capital gap in water infrastructure exceeds $1 trillion. That's an insane number, right? And there's a report that comes out every year from the American Water Works Association. They do their State of the Water Industry report, and their 2025 report had a conclusion in it that says capital funding is the #1 challenge facing utilities. And that was a perfect thing for me, because I got a question literally this week, and it was going, they say, "Hey, AJ, how come you guys aren't focusing on municipalities? How come you're not focusing on municipal water?" And I said, that's a great question, because the best way to save and to help municipal water is by decentralizing all the treatment around them. For those of you that don't understand how that works, the municipality is taking all of the wastewater from all the businesses in its zone. And again, opportunity zones are the worst of the worst. They have the least amount of funding to be able to treat this stuff.
Flint,
so
Michigan.
the water,
Right.
Flint, Michigan, right? So you've got all of this water from manufacturing plants, from auto plants, from small businesses, from chemical plants, from all these different things flowing into a municipal wastewater treatment plant that goes, we don't have the money or funding to be able to tackle all of these contaminants. You guys got to do something about this on your own, because we don't have the money to deal with this, and they're not going to get it. So we could absolutely try and partner with them to try and build more robust systems for municipalities, but we know that that's not the viable solution. Everything that starts off big ends up going small and going in greater numbers. And so that's exactly what we're doing with Water on Demand, in decentralizing all of these treatments, doing point of proof treatment. And there's additional reports that are coming from Citi, BCG, White and Case, that talk about how traditional public financing is insufficient to meet modern infrastructure needs. Right? There's all of these proof points that tell you that this is where the money's going.
Yeah. We have the money. You and I have the money. There's I think it's $9.6 trillion of capital gains this year. Look, here's another important point. I want to close out with this if we can. I recently read a report. The CEO, I think it's Farley, of Ford, went over to China to see one of their manufacturing plants. And he left absolutely terrified. He goes, if we don't have a major innovation boom, Ford will, like something else, and I'm paraphrasing, Ford can see, there will not be a Ford motor. China can be as much as a decade ahead of us in infrastructure, AI production, the data centers and things along those lines. There is going to be a Manhattan Project happening here in America, whether it's infrastructure, whether it's building homes, whether it's manufacturing, whether it's data centers, all of it. The key ingredient is water production, water and water treatment. We are the nervous system, or the heart, of every industrial application that happens in this Manhattan Project. We are actually perfectly positioned to become the next great asset class. And folks, for your faith in us, it was a lot of, we have an idea. Now we're here. Now the thing is built. It's go time. And thanks to you, we're armed for bear. And we're about to go into that market and say, we have a new asset class. We think it's superior to what's out there. Come take a look. And by the way, $1 million restores 36 million gallons of water every year for the rest of your life. How do you like that?
Boom. Drop the mic.
Boom.
I don't want to drop my mic at a break, so.
Yeah, no breaking the mics. Well, thank you guys so much. I think that is a perfect word to end off of. So again, fund is live. Thank you so much to current investors, to all of our current partners and our developing partners. We thank you very much. We look forward to working with you, and overall the community as a whole, for your support. More and more of you are following us on social media. Please do that at Water on Demand on YouTube, or Water on Demand on X, and all the socials. Really just search for Water on Demand. You will find us there. If you're interested in the current investment opportunities that we have available, go to offer.waterondemand.com for be able to sign up to see more. There's an investor presentation from Ken. There's additional supporting documentation you can get access to. It's all there for you. We want to make sure you have that. And again, next month, we're going to be taking a dive into the financial model and give you more information about that. I think we're also potentially going to have a special guest that we've been alluding to this week. We'll see if we can get Brian to hop on the show. He may,
Yes,
may
he's
not,
already
but
said, yeah, he says he'll be there.
he says
Apparently
he'll be there.
apparently 2 hours notice wasn't enough.
Listen.
But he has a month now, so there's no excuses.
No,
so
it's a
guys,
month.
look,
So-
I'm going to be traveling this weekend, and I'm back in the execution mode next week. I'm going to be working with Brian and several other O&M potential partners. We're going to probably develop some PR around that shortly, but this is a fully functioning ecosystem now. So necessarily, I'll have only limited time to speak with you next week and the week following, and I'm going to be doing the drop down. We had a date set for September 15th. It's now October 15th or 16th, excuse me. So we necessarily need to start making these revisions right away. So please get on my calendar if you can. I have very limited time from now to the balance of the month.
All right. You heard
Fantastic. Thank you very much. And thank you all. Thank you, AJ.
Thanks,
it.
guys.
All right, everybody.
Thank you,
Thank you
everybody.
so much.